Hey everybody, welcome back to the Market Interest, where we talk stocks, finance, and the markets. Today, let's go over 3 small cap companies which I perceive to be undervalued at this time. Now, keep in mind, small cap companies generally have more risk and volatility associated with them, so it's got to be something that you can stomach. There could be some pretty big fluctuations, so just make sure it's an appropriate stock for you. Do your due diligence, do your research beforehand. If you're not sure if these stocks are appropriate for you and your portfolio, click the link in the description down below. We can have a one-on-one conversation and find out, is this something that really makes sense for you and your portfolio? Before we dive into the details, guys, don't forget to go long on that subscribe button, and a thumbs up would be nice as well. Appreciate it. Our first small cap company is Grindrod Shipping. Grindrod Shipping originated in South Africa with its roots dating back to 1910. The company is based in Singapore with offices all around the world, including London, Durban, Cape Town, Tokyo, and Rotterdam. Its primary listing is on the NASDAQ, and secondary listing is on the JSE. Grindrod Shipping is an international shipping company that owns, charters in, and operates a fleet of dry bulk carriers and owns a medium-range tanker as well. All right, GRIN is about a $22 stock at this point in time, but let me draw your attention down here to the one-year return. That's right, that is close to a 207% return over the one-year period, which is incredible. That's not something I would expect to see every single year. Obviously, that's not possible. But what an incredible year they have had. Just wild. Year to date, the company's positive. They're up 21.3%, that's a great return as well, especially when you consider the S&P is down, I think it's double digits right at this point in time. Their earnings per share is about $6, $6, which is pretty good, especially considering that it's only a $22 stock at this point in time. Price to earnings ratio is just about 4. I'm going to round it up to 4 right now, guys. That's really low. Forward PE multiple for the S&P 500 stocks is going to be generally between 16 and 17. So to have a forward multiple of about 4 on a company this size, that's attractive. They also pay a dividend of 0.72, which is a 3.5% yield, which that's solid. Again, this is a smaller cap company, so for them to be paying a dividend, that just shows some stability within their operations. We jump to their profitability measures, and let's just jump right down to their net income margin of 26%, guys. That's huge. That's a huge net income margin. The sector median is about 6.5. So they've done some great things here, but also they have one of the youngest fleets on the waters. So their CEO says, which is great. These boats cost a lot of money, I'm assuming. So if they have a young fleet, that means it's going to be there for a long time. They won't need to put more money into these capital expenditures. As you can see, their CapEx ratio is really low. They actually have an F in terms of the rating. When they have larger capital expenditures, it shows that they're reinvesting back into their business and that they're keeping their materials or their equipment up to date. Clearly, they have a young fleet. They have a younger group of ships, so they don't need to be buying new ones. They don't need to be improving it. So they're spending less money on their capital expenditures right now, which is why they have such a low grade. I think that's actually a positive for the company for the time being. At some point in time, they're going to need to replace their equipment, and that's going to cost a lot. But for the time being, they've got a young fleet that we get to work with. We all know that there's been really high demand for different products and services, but again, really products, and that there have been issues with supply chains. I expect that this company is going to do well for a period of time. I don't think their margins are going to stay this high forever, because it seems like a lot of the shipping companies have been able to charge a bit of a premium. Companies are willing to pay more to move their products. They have to get it to move. So I don't expect the profit margins to stay this high forever, but I think there's a period of time where there's going to be some consistency. Let's move to the second small cap stock for tonight, Hudson Technologies Incorporated. Hudson Technologies focuses their full attention on refrigerants and how to impact their chiller performance. From refrigerant sales and services to on-site problem solving and energy savings assessments, they lead the way in ensuring that your services operate at peak performance. So this is definitely a different type of stock that I've ever invested in before. just due to the nature of their business. It's something a little bit more unique. They're a $6 stock, but let's draw our attention down to the 1 year performance. All right, nearly 275% in a single year. That's wild. Again, not something you should expect over time, not year over year, but still, I think definitely room to grow from here. Even looking at it year to date, guys, they had a huge return just in this past week. So they're up 35% for the year, but within the past week is really where we saw the majority of that, of the jump. Really wish I took advantage of that opportunity beforehand. I just found them the day after they popped. Hudson's earnings per share is about 77 cents. And they have a forward multiple of, let's round up to 8. I actually thought it was a little bit higher compared to a lot of the other value stocks that I'm searching for. So I did a little research, and it turns out if we compare their forward multiple compared to all their peers, they're actually still lower. So their peers, I mean, we've got some that are at 14 as their multiple. Others at 50, 30, 11. So they have a forward multiple of 7, 8, even if we round up, which is, I think, very, very fair considering just an average company. But then, especially compared to their peers, they're clearly sitting at a competitive advantage at this point. Their market cap, guys, these are, again, smaller companies. So $252 million, really small cap company. There's going to be some fluctuations here, some bigger ones, but clearly when you see when they pop, they pop. Now, I find their company really interesting. Let's jump over to their website real quick. They are very focused on sustainability and energy savings. That's like really one of their primary missions, it sounds like, is really focusing on sustainability. Let me zoom in here a little bit so we can see. Here they say that they're committed to providing products and services that reduce greenhouse gas emissions, increase energy efficiency, and promote sustainability. So sustainability is really, really a top focus for this company right here. And I didn't realize this, but they have some pretty interesting statistics on their website as well in terms of refrigeration or refrigerant, their cooling products, and how they can be used to save on emissions and lower CO2 emissions. Pretty interesting stuff, especially if you're into that. And I know that's the way a lot of people are trending, the way that a lot of people are investing nowadays is all about sustainability. So I think that this company could have a longer term, buy and hold strategy instead of instead of trying to trade it or time it or holding it just for one cycle. This could be a company that you're investing in for the long term, especially if they're delivering results. If they're delivering positive results and having a real impact on the amount of energy that's being consumed and emissions that are being produced, this could be a really good company to park some cash for some time being. Obviously, you'd want to reassess them and stay up to date in terms of what they're doing and their process and profitability. But definitely sounds like a very interesting company to hold on to for the long term. I don't have a long position in them yet, but this is a company that I do plan on putting some capital to work probably within the next couple weeks. Let's jump to their profitability real quick to see how they're doing. And here we are. Their gross profit margin is at 37% compared to the sector median at 29%, which that's pretty good. Their net income margin, this is good. They have got about 17% net income margin compared to the sector median at 6.5%. So they're doing pretty good there. Leveraged free cash flow looks like that could use some work there. Looks like they need to be probably doing a little bit more in terms of capital expenditures. I'm not quite sure what they would need in terms of capital expenditures, especially if they're more of a service company or they're just providing some product, but be something to research, something to look at for sure. Now their cash flow from operations, that looks like their pain point here. So it looks like they need to have some more efficiencies within their operations to really increase that number, because that's really where they're getting hurt. Jumping over to their valuation metrics real quick, looks like, as we mentioned before, their forward PE is really solid compared to their sector median. But where is it? Their enterprise value to EBITDA, that's super low, both on a trailing 12-month and the forward and forward looking. Yeah, both drastically different compared to the sector median. So those are some pretty good valuation measures right there. I mean, really, really solid compared to other peers in their sector. So Hudson Technologies stock actually looks like a pretty good stock for if you're planning on holding something for potentially longer term with this company. It seems like they have a pretty cool competitive advantage compared to other people in their industry. Let's jump on to the last small cap stock for tonight, which is my favorite, which is Gran Tierra Energy. Gran Tierra Energy is a company focused on oil and gas exploration and production in Colombia and Ecuador. Gran Tierra believes in creating value for all of their stakeholders through oil and gas exploration and production, capitalizing on the global operation experience of their team. They're building a record of success in Colombia and Ecuador in a transparent, safe, secure, and responsible way. All right, Gran Tierra, it's a really good company, guys. I have a pretty big long position in this stock. As you can see, it's a lower price, so $1.50. So something you just want to be aware of right off the bat is that this can be pretty volatile. Again, we're talking about small cap companies here. They move around a lot, and you have to keep in mind also they're in different countries, so there's going to be some type of exchange risks and other interest rate risks or political risks associated with this. So something to be aware of at the very least. Their market cap is about $500 million. Now, if we look at their 1 year return, it's just about 80%, and year to date, they're just knocking it out of the park. Year to date, if everybody started investing January 1st, you're up 87%. So massive returns year to date, especially in comparison to the S&P 500. But again, we're talking about two completely different ballparks here. The company's earnings per share is 22 cents, which is pretty good, especially considering it's a $1.50 stock. And their price to earnings forward multiple is just under 6.5. So that's very strong as well. Taking a look at their peers, you can see that the majority of their peers don't even have a price to earnings ratio because they don't have any earnings to create a ratio. So the fact that Gran Tierra has earnings, some strong earnings here, and has a forward PE, hey, that's a plus right there. Let's go over to their profitability. Check this out. We're looking at a company with a gross profit margin of 69-70% compared to their sector median at 42%. So they're doing extremely well right here, guys. Then going down to the net income margin of about 9% compared to sector median of 7%. So that's looking pretty strong as well. So here's some of the reasons why I'm actually so bullish on Gran Tierra. First off is they have a really strong balance sheet. All right, they've had a lot of debt beforehand. They've been paying down their debt pretty aggressively. So now they're projecting that they're going to have about $500 million in net debt, that's really good, especially compared to where they were before. I think that's really important to have a strong balance sheet, especially with so much volatility in the markets and different regulations. It's just good to have cash on the side, just in case, just in case. Now, it seems like they also have a pipeline of opportunity built up. So they have a top tier conventional oil assets under waterflood, but the bottom bullet point here is what is pretty attractive for me, guys. They have a large amount of future development opportunities that exist. So that's so important. You don't want an energy company whose wells are drying up. That's for damn sure. So this company has product that's available and opportunities down the pipeline. So we can expect cash flows to continue. If ESG is something that you're interested in as well, then their first bullet point right here is pretty good too. So they were able to lower their carbon emissions by 60%. That seems like a pretty good impact within a year. For all the analysts out there, I think you'll like this part here. They go over their 2022 budget and they give you their base case plus their high case. And as you can see here, their high case, they have a price of Brent oil at 80, and taking a peek at Brent oil right now, it's over 100. It's over 100. So yeah, I mean that's better for the stock right now, at least. But and that's one factor, guys, to at least consider is the price of Brent. When that's fluctuating a lot, obviously that's going to have an effect on the share price as well. So volatile industry that we're working with. You can see that in 2021 they were super focused on reducing their net debt. And now that's really important, especially in this, considering where they were before, guys. They had a lot of debt. They really wanted to eliminate that. The cost of debt is expensive. So once they have that out of the way, they're able to really just have more free cash flow. Now, this is a nice chart right here, guys. It goes over their drilling schedule. So you can see that they have multiple projects in development right at once. They're really layering this in pretty nicely. And then they also have exploration going on at the same time, or they will be in the upcoming months. So why I think that this is really important is that they're working on multiple wells at once. When you dive down here and we get to their capital allocation, they are primarily focused on investments that have a target minimum IRR of 20%. So they're trying to get an internal rate of return of 20% once these things are in full operation. So if they have a lot of different wells in development all at once, that looks very promising in the future. Also, as they're doing that, they're trying to keep their net debt low. In the bottom bullet here, I'll get my head out of the way. They have low capital requirements and low declines from high quality assets under water flood, are expected to generate significant free cash flow over the next 5 years. So that's really exciting to hear, guys. That's very exciting to hear. So I think this could be a company where you're actually investing for a decent amount of time. You have to remember, obviously, we're dealing with energy here, very cyclical industry. So you have to be aware and stay on top of the company. You have to do your research and due diligence prior to investing and continuing to invest. But this seems like they have very promising opportunities leading ahead. I would definitely suggest that you check out their website and look at their reports. I could go on for a long time in regards to all the different things that they're doing, multiple opportunities that this company has. I think it's really exciting to have such a small company have some really good opportunities that are lying ahead of them. So I would suggest, again, go onto their website, look up a couple of their reports, see the progress that they're making and the opportunities that are laying right in front of them, and do some research. I think there's some pretty good opportunities for investors as long as you're making the right move and making sure it's not an entire portion, a massive portion of your portfolio, but a small piece to hopefully create some alpha. So with a company this size, and within this industry, I'm of the camp, I really think that energy is going to be pretty important. I've been overweight in my own portfolio for a while now, and I think it's a good place to take advantage. If you think that energy is going to be a critical factor within the next year. I mean, just look at everything that's happening within Russia, Ukraine. Russia is a massive producer of oil and energy, and I think that other countries are going to have to step up and produce and take over for the demand. I mean, there's a huge demand out there. It's not just in the U.S. This is happening worldwide. There's a huge demand for energy, and with this company having so many promising factors to it as well, it's pretty hard to say no. So those are my 3 top small cap companies to invest in for this year, or at least the time being. So I'm going to have some updates in terms of which companies I think are going to be primed for that point in time, at least for the next couple months ahead. But these are the top 3 at this point in time. Keep in mind, small cap stocks, they're going to have a lot more volatility. There's fluctuations with them. They're pretty tricky, and some of these are not U.S. based, so there's going to be even more complications with that, such as currency exchanges, etc. So there's going to be some other inherent risks there. If you're not sure if this should be in your portfolio or not, or you're not sure if this is a good investment for you, again, click the link in the description down below that you can set up a one-on-one consultation with me. We'll talk about different investments, what would be appropriate for you, if this is one of them or not. So yeah, feel free to do that. Again, don't forget to subscribe to the channel, throw a thumbs up on that as well. It helps out the channel. And if you guys have any questions, comments, or suggestions in terms of some other stocks to do in the future, then jump on Facebook. Unfortunately, we have to disable comments on YouTube, but you can jump on Facebook. We can have a whole conversation on there. Go to the market interest on Facebook, and then, yeah, give any suggestions that you'd like over there as well. All right, guys, I will catch you all next week. Take care.